we were starting to pick up that it was going to come quite soon. For one thing, the bank kept announcing that a lot of its consent orders were being lifted. In fact, it managed to, it announced just last week that its 13th consent order was lifted, with about half of those since 2019 actually lifted this year. So it did feel a lot like momentum was gathering toward this final hurdle, which really is the last major hurdle. And really now I think you can say that it puts the scandal pretty firmly behind Wells Fargo.
Have they fixed all that ails them? I mean, it was what, a decade, of scandals and then dealing with it and kind of finding its way back.
Yes, I mean, there is still one formal agreement left, which it entered into in 2024 with the OCC regarding deficiencies in complying with anti-money laundering rules. But in terms of all of those scandals that emerged in 2016 and pertained to mis-selling of products and opening of fake accounts, it's shed most of the...
It's so egregious.
At the time, the list it's like you'd pick up one rock and you'd see something else under the next rock. And I remember Warren Buffett actually said something along the lines of there's never just one cockroach when he was talking about this. This was like years ago he said this. The question I have for you, Sally, is have customers forgotten about all these scandals?
I mean, that's a great question. Memories are short on Wall Street. Are they short with consumers?
Yeah.
I mean, it's almost a bit difficult to say because the bank hasn't really been able to grow beyond its 2017 assets, which were 1.95 trillion. So it's been harder for the bank anyway to really put itself out there as a big sort of expander on Wall Street for consumers. So I think now will be the moment where we see if consumers do have forgotten or forgiven Wells Fargo for those past egregious misdeeds.
1.9 trillion in assets sounds like a lot, but give us some perspective against some of the other big players that are out there.
Well, in terms of, I mean, JP Morgan has effectively added one Wells Fargo in the time that Wells Fargo has been under the cap. So it really hasn't been able to compete with a lot of its Wall Street rivals, which I think now under Charlie Scharf, who can very much be on, its CEO, who can very much be on the offensive now, that is one of the big focuses for the CEO, who really came in to try to rectify all of these misdeeds from the scandals.
So now, what is the bank going to be able to do that it wasn't able to do over the last few years?
More trading, more investment banking. I think it can do more lending. It can probably acquire more deposits. A lot of these things had been restrained and to that 2017 level. And Charlie Scharf, he also said about, when he came on board, he also said about selling some non-core businesses and reducing headcount. And so the bank now is sort of a more simplified bank. Just last week, they announced the sale of their railcar financing and leasing business. So it's a sort of simpler, more streamlined bank. And they're still very eager to be a consumer-facing bank and have significant sort of retail presence, but they're also very keen to bolster their Wall Street presence as well.
I mean, I always think about them in terms of mortgages, right?
Yes.
I mean, has that been really the core of their and kind of retail or consumer accounts? Or
so interestingly, the mortgage issue wasn't due to the mortgage pullback, because Wells Fargo has been pulling back in mortgages like a number of banks since the financial crisis, because after the financial crisis, regulation required that they allocate more capital against risk-weighted assets like mortgages. So that resulted in a wholesale pullback by banks from the sector. So Wells Fargo was one of them, and that isn't actually really related to the asset cap, as it happens. But it was
was separate.
That was separate, but it was a huge and significant presence on in the mortgage world. But like all banks, it's sort of withdrawn from that a little bit, and it's now the non-banks that occupy that.
Right, like during the 08, was it Wells Fargo and Wachovia, right? Like the two, just kind of interesting. Bottom line, net, I mean, the stock isn't up as much as it was initially, but this is a huge deal for Wells Fargo.
It's a huge deal for Wells Fargo. It ends an era of scandals. It's a huge deal for Charlie Scharf. It can't be understated or underestimated, I think. And I think perhaps the shares not being up so much is because it was expected. We've seen a number of consent orders come off this year. And the bank the CEO in particular, has telegraphed that things were going well and that they did expect to have some sort of resolution soon.